Hello, everyone, and welcome to tonight's session where we're going to talk about future-proofing your paycheck. Okay, we're going to discuss things like disability insurance because we both feel like people underutilize this resource a lot. And then also the kind of truth around life insurance because, there's a lot of hoopla around there around using it to invest and stuff. Like, we really want to make it clear in what the circumstances that you use life insurance for and also just what's worth it, what's not. How do you decide what's best for you and your family? So, my name is Prisca Benson. I'm a money coach. I run Our Green Life, and I help professional women create a plan for their money that allows them to save consistently, pay off debt faster, so that they can invest more and eventually to accomplish financial freedom. And Tony, can you introduce yourself?
Yeah, so I'm Tony Steuer, and I'm a financial readiness advocate, author, and host of the Get Ready Before Life Happens podcast. And my mission is to help people create financial readiness plans.
Nice. Alrighty, so we're gonna get started on first talking about disability insurance. So most people might be familiar with disability insurance in the context of something that might come through their job, especially for women. Like a lot of times we know to use this for when you're pregnant. It's kind of weird to call being pregnant a disability, but that's how people are commonly use it. But a lot of times when people either don't have this direct benefit at work or they don't have, like, this is not encouraged for whatever reason, then they just don't have it at all. And so I think it's great to like explore what disability insurance is, why you'd have it, when is it appropriate, when is it not, that kind of thing. So Tony, take the wheel.
All right, so I think you nailed one of the big issues with disability insurance, and that's its name. Is because disability insurance is really in it. And if anybody who has a disability insurance policy, it says that it's income protection insurance. And that's what it's really about, is it protects your income in the event of a disability, but it also protects it in the event of, like you said, is a long-term work outage where you're pregnant, you go on maternity leave, sometimes you're on bed rest for 3 or 4 months before you give birth. Is so that's a really good example, but it's also where you have an illness that takes you 6 months to recover from, or you have something that keeps you out of work 2 days a week for a year, something like that. So it protects your income in the event of different things that happen to you that are just longer term than a medical illness.
I think even for myself, I'm a lung cancer nurse navigator. And so sometimes patients do expect to be out of work for some time or have to do what you said of like maybe working 2 days a week, that kind of thing. And everybody always just knows like, oh, I got to take off work. I just need a letter for work. I'm like, have you looked into disability? A lot of people don't consider that. So this is like, again, like we mentioned, like this is something that's very underutilized. People don't think of disability when it comes to like even having a surgical procedure that would take a few weeks to recover. To just like, oh, I'll just take PTO. But no, you could
Yeah.
actually make income with the disability insurance rather than draining your PTO bank. Okay. And so, in what circumstance, in terms of people who don't have disability insurance available through their jobs, then how would they go about searching for disability insurance?
That is a great question. Is there are not a lot of people who sell disability insurance, unfortunately. So is you do want to look for an insurance agent who sells disability insurance, but more importantly, you want to look for one who represents multiple insurance companies, is because each insurance company has their own underwriting standards, and some specialize in certain fields. Like there's some insurance companies that are really good at disability insurance policies for nurses or disability insurance policies for attorneys. So that's the consideration. Also, you want somebody who's familiar with medical conditions, because there may be medical conditions that some insurance companies aren't as keen on underwriting and issuing policies. That's definitely something to think about. The other thing to think about is that even if you have a job, is you may not have sufficient disability income insurance through your work. You may have a very basic disability insurance policy, so you may need more on the individual marketplace. So the way to look at it is to come back to the definition of it being an income protection policy, and to think about, okay, if something were to happen to me, how much of my income would I need to protect? And do I have enough coverage to cover that?
Agreed. And so if somebody were to say, well, how do I know if I need disability insurance? How would you help them determine that?
It's pretty simple. Do you depend upon your income? If you're
Yeah.
not depending upon your income, then you don't need disability insurance. But if you're saying, oh, I need my income to pay my rent or mortgage, I need my income to put money aside to save for retirement, if I need income to pay for my kids and all their expenses, then you need disability income. So that's thing is to flip it on its head and to say it's not about the disability. It's about, do you need to replace income or not? And then it becomes a very simple question.
Thank you so much. So, is there anybody who shouldn't have disability insurance or you wouldn't recommend it? I wouldn't say shouldn't, but
I get back to a very simple thing is somebody who isn't dependent upon their income. So let's say you're 50 years old, you've achieved fire, financial independence, retire early. Well, then you don't need disability insurance. So that's the way. And I think that's the whole challenge with insurance is people have forgotten that insurance is about protecting against a risk. And so if you take it back to that, do I have this risk? Then the question becomes very easy to answer. So, for example, if you have a car, you have a risk of getting in an accident. And that's forgetting that every state it requires you to have auto insurance, but you do have a risk of getting in an accident. So you buy auto insurance. If you have a home, your home's at risk of burning down. So you get homeowners insurance. So that's a way to really look at these things is, do you have the risk or don't you have the risk?
thank you. That's very clear. And so, of course, I think in general, most people are either not in pursuit of fire or they haven't achieved it yet. So, therefore, pretty much most people would benefit from having disability insurance. Alrighty, so let's move on to life insurance. So I want to start off with a personal anecdote that, for me anyway, when me and my husband first got married, we were doing the responsible things, right? It's like, okay, let's get life insurance because obviously we're young and things can happen and we are dependent on each other's income. So we need to do that. So we had gotten both term and whole because that's what the guy told you to get. And then on top of that, later on, they're like, oh, well, the term is convertible and you could turn it into a VUL, or I think it's VUL. And so, and what does VUL stand for again? Is it?
Variable universal life.
Yes. Okay. And so in there, they allowed me to invest the money too. So it's like, oh, you can have growth in here. And I'm like, okay, cool. Then as I was learning things like for myself instead of just somebody telling me things, so I was learning stuff about financial independence and insurance and all that stuff. And I was like, oh, and I started investing. And I'm like, hey, my money is making way more money than what it's doing in this policy. So I'm like, at this point, I had like 3 or 4 insurance policies because these things kept converting and all these fancy stuff that the guy convinces you to get. And I'm like, okay, sir, I'd like to cancel at least one of these policies because I just have there's too many, and my money's growing somewhere. So I would like to cancel one of these. I would like you to give me the best decision. And do you know this fellow? He brought the papers for me to close the account, but he was convincing me not to, and even calling me difficult because I didn't agree with his opinion. And then when I finally said, listen, I'm going to close one. I'm just asking you, which one should I close? Which would be the least problematic to close? And he gave me the paper and threw it across my kitchen table, guys. And this, to me, was so representative of what I was learning about life insurance, which is that they're selling you this because it makes money for them. It's less so about what's good for you. Now, I'm not trying to say that every life insurance agent is no good. I'm not even saying that guy's no good. But I'm just saying that you need to know what's real and what's not, what makes sense for you and what doesn't, instead of letting somebody else dictate that. And then even with the fact that I had put money into this policy, I didn't, people were like, well, I put all the money all these years, like now that's money wasted. The more years you spend on it, on something that's not working optimally, the more you're going to lose down the line. So there's a couple lessons in there. One is to just make sure that you understand these things for yourself so that you can make the right choices. But also, once you know that there's a better choice out there, don't worry about the past. Just focus on your future. And so that's my little spiel. But this, the main thing we want to talk about too, outside of this in general life insurance, was this be your own bank situation. I had a client come to me and she was like, "What do you know about this?" And I was like, oh boy. Anytime I hear money and insurance, I'm like, you guys those are two things that really shouldn't mix: money, growth, and insurance. Okay. So, but it's being sold out there. So, Tony, what is it that you could help our audience understand about this whole infinite banking strategy?
Well, here's the way to think about it is it's sold as an investment, but as you put it, it's an insurance policy. So if you buy a variable universal life, an equity index universal life, whatever, all these different types of insurance, whole life, you're buying an insurance contract. And the reason why you're always going to be behind is because you're paying for insurance.
Mhm.
So if you get back to the whole thing about risk protection, the insurance company is running the risk each year that you're going to die. And because they have a risk, they're going to charge you for that risk because they're an insurance company and that's their whole thing. However, if you look at these videos online on YouTube, Be Your Own Banker, the missing money concept, blah, 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 there's hundreds of these schemes. And that's exactly what they are, is they're just very fancy ways to sell you life insurance. And so that's the first thing you have to think about is if you get one of those, you're going to get an insurance policy and it says, this is an insurance contract. It does not say anywhere on there that you're buying an investment. Now, the thing that gets tricky here is there is an investment component to some of these policies. So the policy you mentioned, Prisca, variable universal life, is you can invest in mutual fund sub-accounts. Now, they're not the same thing as investing in a mutual fund. They're kind of a mirror account that tracks the mutual fund. And that could get very detailed for this conversation, but equity index life insurance works the same way. Now, the other things to keep in mind is one of the things they go, oh, well, if you buy these policies, you can borrow your own money. You're going to be your own banker. If you borrow your money, Prisca, if you were to borrow money from yourself, how much interest would you charge yourself?
Zero.
And guess how much an insurance company charges you?
I actually don't know.
They charge you like up to 8%. So are
Mm,
you borrowing your own money if you're paying 8%? To me,
mm,
that's not borrowing my own money. So that's one of the things that they don't tell you. So you're not borrowing money from yourself. You're borrowing money from your insurance policy, and the insurance company is going to charge you interest. So you have that. Then you have what are called surrender charges, which is similar to an
mm-hmm.
early withdrawal penalty. And on most of these policies, the surrender charges run up to 15 to 16 years, which is a really, really long time to not have access to your money. So you have a liquidity issue on top of
Mm.
that. And in the first few years, your surrender charge is close to 100%. So you can't even get at your own money for quite a few years down the road. So those are just some of the basic issues that make those policies problematic.
Interesting. I actually told one of my clients too, I was talking to her about her policy. I think it was just a regular whole life, but this person had no dependents. Nobody's dependent on her income whatsoever. If she died today, it would not affect a person, honestly, not in a fiscal way, just to be clear. So I'm like, so why is it that you have this? You know, like she had her own fund. She's a person that has hundreds, a lot of money in the bank. So I'm like, what exactly is this here for? And so I had her look at her policy and I was like, hey, look at how much you're paying per month and how much is actually going towards any growth. And it took two payment cycles for her policy to make money. And I was like, so if you invested this yourself, you'd be way better off. Like you're kind of losing money here. And when she went to talk to her insurance agent to close the policy, mind you, too, like once the people saw the policy, you never hear from them again. Okay. But the second you say you're closing, I told her not don't call the person who sold it to you. I said call the insurance company and just tell me to cancel it. And of course, that person comes out of the woodwork and is like, hey, how come you're closing it? Why? All of a sudden, this person is now interested in your well-being. So it just goes to show like you do need to make that analysis for yourself. The recommendation that you would make for most people when it comes to life insurance is what, Tony?
that just get the insurance you need and to remember that it's risk protection. Like you said, is there somebody who is financially dependent upon you? If there is somebody financially dependent upon you, then you need insurance. But then the game is to think about the cheapest insurance that you can get because you don't usually. So that gets into the term versus permanent. So I'll just touch on that real quick. Most
Hmm.
people have a need for term life insurance, which is death benefit only, because you have a defined period need. So let's say you have a kid. You want to provide life insurance to take care of your kids' expenses, maybe for 20 years, 25 years. So that's term insurance. You have a spouse, and you're protecting your spouse until you've saved enough money for retirement. That's a 20 to 25 year thing. It may even be shorter. So again, you're looking to protect against the risk, and you're looking to do that as inexpensively as possible. So think about it this way, everyone, is with your auto insurance, do you shop your auto insurance? Or do you just take the highest one you can find? And probably you shop it. So it's the same thing with your life insurance is to think about that because the life insurance industry has done an absolutely fantastic job of brainwashing everybody that you need to build up a cash value, but you don't.
Thank you. And who would benefit from whole life?
There are some circumstances. If you have a child with special needs that's going to be financially dependent upon you for the rest of your life, you have a need for a permanent life insurance policy. But whole life insurance builds up a cash value. However, if you're buying a life insurance that you want to keep in force for the rest of your life, you don't need a cash value. So in that case, you want to look at a kind of coverage called guaranteed universal life insurance, which works like a lifelong term policy and it goes to age 100 to age 120 because what good is the cash value on a whole life policy if you're never going to cash it out?
Mm.
So, whole life makes sense in some estate planning scenarios, in some business planning scenarios, but other than that, it doesn't really make sense for pretty much anybody.
And what was the name of that kind of policy you were talking about, where it's
Guaranteed universal life. So, whole life can be good for some people in certain circumstances, and it's a safe way to save some money, but yeah, it's not the basis for your financial plan.
yeah. I think ideally too, at least what I've learned as I've been on my personal finance journey, is as we're building our own wealth, the need for life insurance, depending on your circumstances, but for a lot of people, decreases because you're able to fund your own issues. So even if, like, for example, when it comes to something as simple as like your auto insurance, like your deductibles could get higher because you have an emergency fund. So these are all things that to consider when you are deciding whether or not you need insurance and not knowing that insurance is not meant to be used. Like sometimes people are just like, oh, like I don't like with term, they're so like aghast with the fact that they're going to pay for this many years and get nothing out of it. But really, that's the hope is that you will never have to use it. But there are circumstances outside of our control and where if you want that the people who need it will have it in case they do. So that's the beauty of insurance as a whole. And so one thing I want to think through too is the cost of these kind of things, because budgeting is where I live. So when it comes to like things like disability insurance, what pricing should people be looking at where it'd be like, oh, either too cheap, like alarmingly cheap, or like this is exorbitantly high, so that they could find a good range to like explore. Of course, we know it will vary per person.
That is a difficult question because pricing depends upon a lot of different factors.
Mhm.
So, what I would say is you want to look at an insurance company's financial strength rating.
Mm.
There's four major companies that look at insurance companies and their financial strength. There's AM Best, Moody's, Standard and Poor's, and Fitch. And you want to make sure that you're buying from an insurance company that's financially strong because these policies are going to be enforced 20, 30, 40, 50 years. So they're going to be around for a long time. So you want to be sure that the insurance company is going to be around to pay the claim because that's the most
Mm.
important thing with an insurance policy is that the
Yes.
companies are around to pay the claim. So sometimes price, yeah, as I did say earlier, you want to pay as little as you can, but you want to keep in mind that you do want to buy from a company that's going to be around to pay the claim. But that's where it pays to compare different policies. And that can get a little tricky
Hmm.
sometimes because you want to make sure you're comparing apples to apples, and every insurance policy is a little bit different. So anybody who's shopped for auto insurance has run across that trying to compare auto insurance quotes. It's not quite as easy as Flo would have you believe.
That's funny. There was something you said there too that caught my attention where we're talking about like where to look because even when we are looking at things like you said, the auto insurance and stuff, like getting the cheapest policy is not always the best thing. If we know this company has a history of making it difficult to file or get a claim. So the companies that you mentioned, are those where people would get that information? Like how would they know the reputation of this company in terms of actually being able to file a claim and getting paid out?
Well, so what those companies do is they're just more on the financial strength,
Okay.
but because of Google, ChatGPT, and everything, you can just say, "Hey, tell me about complaints against XYZ insurance company," and you'll get pages of search results. And the other place where you can check that is also helpful to check with your state insurance department.
Mm,
And state insurance departments typically keep a list of carriers, the complaints against the carriers. So you can see, like, okay, this insurance company is always in trouble with my state
mm,
insurance department. That's not a good sign if the state insurance department is constantly after an insurance company. It's not worth saving that $100 a year. Like you said, is if you're in an auto accident, you want a company that's going to pay your claim. And so that is something, but that's the power of the internet. I mean, you have to
mm,
drain out, the noise, but
mm-hmm.
you can get a pretty good sense, if there's a website that says XYZ insurance company stinks and it's got thousands of posts, that's a bad sign.
That's funny. And when it comes to life insurance too, I know in general we want people to get term life until they're able to self-fund, for the costs of losing income. Are there any other things that you want people to consider when purchasing either term or whole life insurance or any kind of life insurance as a whole?
Really, it's always to start with what you need. Is
Hmm.
don't start with a product, and that's good financial advice anyway. Is, we hear that, we see a video or we hear somebody talking about it, we go, oh, should I do XYZ? Instead of saying, this is my goal, and then
Hmm.
going out and finding the right thing to fill the goal. Now, when you're thinking about your insurance portfolio, think about what your risks are. Do you have a risk of being disabled? Are you at risk of losing your income? Do you have a risk of dying? Like you said, is somebody financially dependent upon you? With life insurance, this is the other thing that kills me with life insurance is they'll say, oh, well, buy an insurance policy because you don't know if you're going to be insurable later on. Have you heard that one,
Mm.
Prisca?
Yeah, I
You know,
have.
like, well, you don't know if you're ever going to need a life insurance. So that's kind of silly because, you can't buy car insurance for a car you don't own because it's like, hey, you might buy a Ferrari someday, so you can get Ferrari insurance today and it'll be cheaper. And it's like, well, I'm never probably going to own a Ferrari. But, it's like, but with life insurance, they're trying to get you to buy life insurance before you need it. Oh, one other thing I'll add on life insurance, you don't need life insurance on your kids unless your
Mm.
child is Macaulay Culkin and you're dependent upon their income for all your living expenses. You don't need insurance on your kids. In fact, I think it's a little bit morbid to buy insurance on your kids. So I'll just throw
Yeah.
that in there. Oh, sorry. One other thing. The other thing, too, is if you have a spouse who's not working, you should get life insurance for your spouse who's not working because they're providing a value to the home. So
Mm.
that's something that sometimes people miss is, that I have a spouse who isn't making as much money, so I don't need as much life insurance. Well, if they're the spouse who's driving the kids around to soccer practice and everything else, well, yeah, you need life insurance for them as well.
Yeah, because even though there's no cost, visible cost to what they're doing, if they do pass, then you're going to need to likely pay someone or at least get some added support if you don't, especially if you don't have family support. Wow, that's so interesting. The other thought I was having too is where we talk about like putting this on income. When I know for me anyway, my life insurance was always monthly. Is there any circumstance in where you could pay like 6 months ahead of time, 12 months ahead of time for any kind of these insurance policies?
Yeah, typically you can pay annually, semi-annually, quarterly, or bi-monthly bank draft for pretty much any type of insurance. And if you pay annual or if you pay any mode other than annual, there's usually a service charge. So, for
Mm,
example, on life insurance, you're typically paying 8% of the premium each month. And so if you add that up, you're paying an extra 6 to 8% over the course of the year
mm.
if you're paying by monthly bank draft for that convenience. So that's something to think about, is to figure out what that difference is. And if you can pay the annual premium payment, you're usually better off paying the annual premium payment.
Awesome. I like to talk to people about that because when it comes to, even for myself, like auto insurance, and that's not the topic of conversation today, but I pay it in full, the discount is massive. So even if you're not doing something like that today with your current insurance, whether it's, life insurance or whatever other insurance you have, try to make that a goal because you're going to save a lot of money that way over the years. And that money is in money you can then save or pay down debt with or, invest more rather than what your insurance is paid. Like you're good. And the vehicle I like to share with people about doing is something called a sinking fund, where if you know this $1,200 is going to be due January 1st for this policy for the year, then that means that every month I'm going to be putting $100 away into an account. So that way, when the bill comes, there it is. Okay. And it's a way of, you can do this with any expense that's irregular or that happens very infrequently. That way, you can always stay ahead. Nothing catches you slipping. And then you're saving a lot in the long run. The other thought to this is about, when we're talking about matching the retirement plan, we want to talk about, making sure that we have money set aside for things like this, the disability and term life, before you spend money on, I don't want to call it frivolous, but there are things that we more want than need. We want to make sure our needs are covered. And I think we forget that something like disability insurance is a need. And then we get confused about what we need when it comes to life insurance. So hopefully this conversation has helped clear that up so you know exactly what you need, so that you can actually put that into your budget and protect your family, protect your income. My whole thing at Our Green Life is to take the stress out of money as much as possible. And so if you know that you have this in your back pocket, something like disability insurance, it doesn't pay 100% of your income ever, right, Tony? Okay. But
Yeah.
it's going to cover a good chunk. So that way your budget doesn't have to go kablow, and you don't have to panic so much, like you have something happening in the background. Right? How much does disability usually cover?
Disability insurance will typically cover 60 to 70%
That's what
of
I
your
thought.
after-tax income. Is part of that is the insurance company doesn't want to give you an incentive to go out on disability. So,
That's so funny. So yeah, keep that in mind too when you are getting disability insurance, because if you don't have it, I'm sure you're gonna go look into it after the session. But just keep that in mind so that way you know that there is a gap that's gonna be there, but it does help a lot to know that there's money coming your way versus trying to figure out what's gonna happen and blowing through your PTO and things like that. Alrighty, so there were some questions that people put in when they registered. So I'm just going to read them off because they're all insurance related. So one is whole life insurance a scam? Is term life insurance better for those with limited resources?
oh yeah. Well, I think you've heard our opinions about whole life insurance. So I wouldn't necessarily call it a scam, but those sales techniques that we talked about, be your own banker, missing money concept, that they mimic the signs of a scam. And so the better way to think about life insurance and your finances in general, and life in general, is to think about what you need rather than what somebody's telling you. So think of it this way. When you go to the grocery store, you have a pretty good sense of what you want to buy when you go shopping, and you're thinking about your needs first. You're making I know ziti this week. So you're going to buy the ingredients for ziti. So you're thinking about your needs. Your kids need Lunchables because all kids eat Lunchables, right? Whether it's good for them or not, they like Lunchables. So you're going to buy the things that you need. So that's the way that I would think about it, is to flip that script, not only with life insurance, but money in general, and to think about like, hey, this is what I want. I'm going to get what I need, not what's being
Mhm.
sold to me.
I actually like that because I think one of the things that people I think it's underestimated is that you turn 18 and you're just supposed to know what you're supposed to do with your money. Like there's not a whole lot of guidance along the way. Sometimes people do have good mentors that they could follow and like really walk them across, but a lot of it we're just kind of figuring out as we go along. So then when, you think in your head, okay, I need life insurance, but not really thinking about what I need life insurance for. I just know that I'm supposed to do it because I'm grown up now, kind of thing. And then so that person then gets to dictate to you what you need. And so it's better for us to like have the end goal in mind. Who am I trying to protect? What am I trying to, even when it comes to disability insurance, what am I trying to achieve here? And then let that guide your decision in terms of what you're going to get. And it makes it so much cleaner. It also helps with the general financial plans as a whole, too, because at some point it's like, do I have enough money or can I spend money now because I've saved enough? Like, if you don't have a goal in mind, you could work for the rest of your life and never be satisfied. So it's very, very valuable for us to take a look within ourselves and see what is it that we want from our money, from our insurance policies, whatever that we interact with. Alrighty. And then the next question was how to approach life insurance when there is a disability or special needs dependent to account for as well.
Yeah, well, and I started to talk about that, and that is a wonderful question. So, if you have a child with special needs or special needs person who's dependent upon you, not always a child, maybe niece, nephew, whatever, then maybe you need permanent life insurance for that. There are what are called special needs trusts, which are special trusts. They take care of the needs of somebody with special needs. I know I've said special needs a lot in that same sentence because we're trying to think of the best way to describe a special needs trust, but they're designed for that. So that special needs trust would normally own the life insurance policy. And the reason for that is people who have special needs usually can qualify for some federal benefits and state benefits, but they can't have a lot of assets. So,
Mm.
sometimes these things are set up, the special needs trust take care of their financial needs. And that kind of trust would own the life insurance policy. So if you have a child with special needs, there are a few things you could do. I want to throw a shout out to ABLE accounts. Prisca, are you familiar with ABLE accounts?
I've heard the concept, but I don't know much about it.
Yeah, and unfortunately for people watching and listening, I only really remember the very basics of it, but there's special accounts where you can put aside money. It's kind of like a 529 plan, but for kids with special needs, and you get a lot of tax benefits from doing it.
Mm.
And they're available. Every state has an ABLE plan. So you can just Google ABLE account or email me, and I'll get you a link to the national site for ABLE accounts, which has a link to each state that where you can set up an ABLE account. So kind of like a 529 plan where you can set it up in any state.
Oh, very cool. And as for that trust you were talking about, do people need a lawyer to set that up, or are there online ways for them to do that? Do you know?
I'm sure there are online ways to set it up. I would recommend probably doing it with a lawyer just to make sure it's set up correctly. Because if this is someone you love who's not able to take care of themselves, you definitely want to make sure it's done correctly.
Understood. And on that note too, at least for me and a lot of places I've worked, having a legal plan is something that might be one of your benefits. So that's something to look into when it comes to open enrollment time, which for most people is in the fall. So having that, it's great. I mean, when I was a teenager, it was great that my mom had it because they helped me cover parking tickets. But as an adult, it's helpful for setting up things like your will, things like a trust, things like that. So it makes it free because you are paying for it, but it's significantly more affordable or much cheaper than if you were to go out and seek this assistance on your own. So just to look out for that in terms of your benefits.
Yeah, Prisca, so for everybody watching and listening, I'm putting into
Mhm.
the chat a link to Fidelity's website where there's an article about ABLE accounts.
Oh, thank you.
I'm not endorsing neither Prisca endorsing Fidelity was just the first result that came up in Google.
Nice. Thank you for sharing. The next question said, how to tell which companies are most likely to pay out for claims. We kind of talked about that. We could review that again.
Yeah, so you want to check the insurance company's financial strength ratings. So there are four major rating services. AM Best is the oldest one, but each rating service has a slightly different methodology. But what they do is the essential thing is they measure whether the insurance company is going to be able to pay a claim or not. So you want to make sure that you try to get ratings from a couple different of the companies. There's AM Best, Moody's, uh, Fitch, and Standard and Poor's, and they rate the insurance companies. They look at their assets and liabilities and their capital and rate of return and their investments and the whole thing. And so they take a look at that. And the other thing to keep in mind with insurance companies is that the insurance departments do monitor the insurance companies. Unfortunately, they don't step in usually until things get really bad,
Mm.
but insurance departments do actually monitor the insurance company. So it's not something you want to count on because they step in when things get bad. But there is a system set up to protect policyholders. And every state participates in something called the Life and Health Guarantee Association, which guarantees a portion of the benefits in case the insurance company goes bankrupt.
Oh,
So
that's good to
there is
know.
a system. Yeah, it's a small amount, so you don't get the full policy, but there is something that's guaranteed.
Okay.
It's kind of like FDIC.
Ah, yeah. Most people are familiar with that. All right, the next question. We got a lot of good questions. In my 50s, how does this affect my calculations? What about those companies that offer gap insurance?
Unfortunately, I'm not sure what gap insurance is being referred to here, so I can't
Hmm.
address that second part. In terms of your age, again, is if you flip it on the script, instead of worrying about your age, is to think about what your needs and goals are. That makes it a lot easier. Of course, if you're in your 50s, insurance is going to be more expensive because it's more likely that you're going to die in your 50s than it is in your 20s. So
Hmm.
when you think about it from an insurance company standpoint, is an insurance company really doesn't want to pay out a claim. At the end of the day, is it's more profitable to not pay out a claim. However, that's what an insurance company's business is. So what they try to do is they try to charge people the right amount that they're able to pay out all the claims and to make some profit. So that's the thing to think about is how much of a risk are you to the insurance company? Is if we get back to a car, somebody who's an 18-year-old driving a Ferrari is a bigger risk than a 50-year-old driving a Subaru Outback. So that's the thing. So the insurance companies, we all know that the insurance company is going to charge a lot of money to insure an 18-year-old driving a Ferrari versus a 50-year-old driving a Subaru. So that's the same thing is, yeah, I'm a little 50 plus myself, is it's expensive, but that's the reality. The insurance company is saying, okay, there's a greater likelihood we're going to have to pay out a claim, so we're going to have to charge you more to reflect that risk.
Yeah. The thing I would like to consider too when it comes to this is one, of course, if you are in your 50s and you have no need for whole life, then this is definitely a good case study for term life insurance. Yes, it'll be more expensive than if you got it at 20 years old, but again, like Tony said, it's not about you. Okay, it really is about the people you're trying to protect. So as long as they have those needs, then you would pursue it. On the other hand, there are different terms, right? So let's just say you're 50s, but you're starting to get your financial life together, or maybe you're getting close to where you may not need it, but you just want it for a shorter period of time. You get insurance for a shorter period of time, which is going to be cheaper than them insuring you till you're 80. So these are all like ways to like look at it. In your 50s, those are some pretty high earning years for people who are working. And so because at this point you're past entry level. And so in this time, like maybe this is a good time that you're booking up your 401k, you're booking up your IRAs. And at a certain, I think at 52, you can actually add more than the traditional max. They give you more than that. So that's a great time that if it's possible to put money there and decrease your need for insurance itself. And
Exactly,
then when it,
exactly.
oh, go on. You were saying.
Oh, and I was going to say, as you point out, is so term life insurance is available in increments, 10-year guaranteed level, 15-year guaranteed level, as you pointed out. And the other thing with the term insurance policy, because it's pure insurance, you can terminate it any time. So you don't have to
Mhm.
continue it for the full 10 years. So that's what's really nice because it's just insurance. There's no surrender charge. There's nothing. It's just like terminating your auto insurance. If you sell your car, you don't need the auto insurance anymore.
Excellent. Yes. And on that note, too, not that this is an auto insurance conversation, but keeps coming up because that's what more people are familiar with. That if you did turn off your auto insurance, then let's just say, oh, I paid up for a year, like you get that money back that you did pay ahead for, just so you know. And in the only context of which I've heard of gap insurance is when it comes to car insurance, where, the gap between how much you bought the car for, how much you have it loaned out to how much you owe on the car. So I don't know if that's what that person was referring to, but that's a different conversation. You could always email us
Yeah.
if you wanted to get clarification on that. Alrighty. So this question was not fully read out, but we did want to like address it. I think maybe the characters got cut off when it says when starting out as on one's own as an independent woman after a really long abusive relationship with someone who doesn't allow, and then dot dot. So my assumption or our assumption when we discussed this was that this person's kind of starting over financially. How do we, this is great for our readiness advocate here. Tell us how this person could, how do they get started?
It's a challenging situation because, you might be at an older age, but it's never too late to start. So, I would say to start with the basics, to think about, what are the things you need? Probably finding a good money coach to help you get set up. There are some resources out there for women and men who've been victims of financial and or physical abuse. So you're not alone on a journey. I don't have any of those resources available right now, but if you email me, I will make sure you get those. I've done some podcast episodes with people who talk about recovering from financial abuse, as well as for financial advisors to spot financial abuse. So I would say to not be discouraged is that there are a lot of resources to help you to get started, and it's okay. No matter where you are, it's never too late to get started. Don't be discouraged. Just do the best that you can.
That's it. And from the budgeting aspect, things that I would think about when someone's starting over is, first of all, safety. So making sure that you have somewhere safe you can afford to stay, you can feel, because there's nothing when you come out from a situation like that, I'm in a nursing background, the hierarchy of needs, like safety is the number one thing, and start building that emergency fund. So that way you do have something to fall back on. That'll give you some calm when it comes to your life. And then starting to layer in these strategies. I don't know, depending on your circumstances, you may not have people depending on your income secondary to the situation, or maybe you do have children. So that will alter, of course, which policies you're going to be looking into or not. But again, I think the best principle, especially when you're kind of starting over, is what is the end goal, like Tony was saying, and then byproducts that have to do with that end goal. Don't just get stuff because people tell you you should. Look, is this accomplishing what I need right now? Not something I may need 10 years, 20 years from now. Right now, what do I need? Who do I need to cover? And start there. And that will help keep your costs low while you're rebuilding.
Yeah,
Mhm.
and Prisca, you hit on something I think very important is safety is always first. If you're in a situation where you're having to start over from somebody who is a controlling relationship, is that, setting up a bank account, but maintaining your privacy is
Mhm.
very important, is to do what you need to do to take care of yourself first, and then to think about some of these other things as they come, but as you grow back into your confidence and establishing your own identity.
Yeah. Having a trusted person. I mean, I've never been in this situation before, but I've heard where having a trusted person where maybe you could, like, if for whatever reason your situation was risky, you could keep your stuff with this person, whether it's your stuff with regards to your finances, your important documents, so that if you have somewhere to go, okay, that's not attached to this person that's hurting you. Alrighty, I think that covers everything. Thank you so much for attending. Hopefully this was very valuable for you, and we have a good day.
Thanks, everyone.